So inside of this video, I'm going to break down a market maker buy model on ES. This is a move that I actually called to my group. So we're going to go ahead, cover each individual part, and then just break down a trade that was super clean using a 4-hour power of 3 methodology, and again a few other simple techniques. So let's just start off by me showing you the proof. So you can see the date here. This is UK time. I mentioned, and this is just before AM session starts, so I mentioned here that ES looks good, looks strong, marked on sort of the key arrays here, and I marked the area in which I wanted to see price go ahead and run away from. You can pause the video, you can read through this, and just sort of mentioning some pre-context to the move. Again, just slowly updating it as we go along. I mentioned an area here in which we should start running from, black line being invalidation. Again, I'll explain all of this in a minute and why sort of this played out how it did. Again, lower time frame broken down a bit here as well. It's not a signals group. This is more just me trying to help you guys sort of understand tape reading. There was a point in which I did start to doubt the setup, but we were just holding him at B at that point. So yeah, and as you can see, I think if I update it, right, target gets hit, sort of the intraday target. So let's actually go ahead and break this down, right? So just from the technical standpoint, if I just stay on the 4-hour here, right, we had the original consolidation. If I go to the weekly, right, I'll just hide everything here just for a split second. So on the weekly, we're in a bullish trend, and I wanted to see a new higher high being made. Okay, this week had closed and rejected away from these 2 down candles. So I wanted to see price inside of this week pretty much go ahead and reach for this high, which we did. I also mentioned that in my Outlook, which is completely free, which is mentioned inside of my Discord. So you can go ahead and watch that if you'd like. Also, if you'd like access to this premium Outlook channel, then you can actually get it free for a period of time. You can go ahead and check that out. That's the first link in the description. So let's just put this back on. Actually, I'll cover this for a second. So the trade was on the Tuesday. Okay. The main sort of driving factor POI wise in this scenario was this inversion FVG here. So you can see how when we're in that buy program, we're expecting bearish arrays to hold on the bullish side. So we printed Monday. Monday went ahead and got swept out on the Tuesday, and that frames the context for a classic expansion to the upside. So let me just put some of this stuff back on. So you can see that daily IFG really holding there. If we now jump to the 4-hour, I can give you a bit more information on what's going on here. So I'm going to delete some of these that are irrelevant to the setup. But sort of the key points to understand is we have that original consolidation. We then have that strong move into these PD arrays, including a breaker block on the daily, and I believe a daily order block as well. This is where that smart money reversal is kicked in, where we've seen the displacement either side creating a balanced price range, and price hasn't respected that FVG too nicely. This is where I wouldn't have favored a buy in this area just because of how choppy, and it's just not clean in my personal opinion, right? After we got the expansion on the week to around this area, it was pretty clear that we were more likely than not going to trade higher. That's why I had that sort of bias in mind. So this was sort of the pre-tense to the trade. I'll also mark this on, this was previous day's low, right? So this was Monday's low. There we go. So Monday's low got taken out. I'm actually going to replay exactly where we were. We were around here. So Monday's low got taken out into a daily FVG, daily IFVG, right? We also had a ton. If you think about this as a sort of like quote unquote resistance level right here, this level would have been reviewed as resistance in sort of support and resistance retail view standpoint. So we're looking to obviously fade those guys and trade through that level. So we simply put, we just know there's a lot of liquidity inside of that area. So again, respecting bullish arrays. Okay, we also have this down close candle technically being viewed as support in the form of an order block. Also, we've got this new week opening gap. But the sort of the main points that I want to hit home in this example or case study was this daily IFEG and the fact that when we are bullish, we're looking for old bearish arrays to act as support, right? Coupled with the fact that we went ahead and swept during swept Monday's low out, provides further context. So inside of that, okay, we can see on the hourly how again we've basically got a fractal version of this entire model here. So this is a larger market maker buy model, and fractally we also have this smaller market maker buy model. Here we had the hourly going lower. We then had a change in state of delivery, whether you wanted to say it was via the FEG here or it was via the order block, makes no difference. You get to the same conclusion. Let's just say for simplicity's sake, it's the order block that's key here. So we have the order block, we have the run above swing high, market structure shift, all that good stuff. We have fair value here. We also have a breaker, right? These two up candles would act as a breaker here. So coming into AM session, right? So this candle would have, if we go to the 15-minute, actually, let me just call this. So Asia, London, okay, and then AM session. So AM session has just opened up. AM session is this grey box here that's just beginning to print. You'll be able to see it as the candles load. Basically, we'll have more and more candles print, and you'll be able to see AM session. So at the start of the session, this is key, right? I'll definitely write this down. It's a lot of the time you will get some sort of manipulation above and below in price. So this wick down and wick up is basically inducing a ton of players into the market, right? Whether they're looking to be breakout traders short, breakout traders long, they're all getting fried here. So not a lot of the time, it's not every time, but some periods, sometimes we can definitely at this just during that sort of first 30 minutes create a bit of like a Judas's fake type style move, which you don't want to get caught in. Okay, you want to slow down. You want to let AM sessions sometimes do a bit of damage. Right here, for example, doing the damage higher and then yanking itself lower. Right. So we know that price can sort of play around. Okay. Now, if I just go back to the 4 hour, the easiest way to understand this, okay, is I'm using a 4 hour power of 3 in this case. So I'm basically fixed on the idea that I want to see the next 4 hour candle start off, potentially trade lower, and then expand to the upside. Okay, so I understand that anything beneath this level is basically discounted. It would be nice for us to basically go ahead and tap this order block, which at the time you obviously wouldn't know if we're going to actually retrace that low, but just as sort of an area to understand, we could go ahead and tap this immediate rebalance as well. And the sort of invalidation point, okay, or an area, I wouldn't even say it's a hard invalidation point, but it'd be an area in which I'd start to doubt the trade, which would be this low. So you could end up positioning your stop in and around this level, okay, if you were to just play the retracement. So there's two ways to sort of go about actually playing this. Also, sorry, another point that I forgot to mention is this is an AM session continuation cycle. So this is where I'm anticipating London's run to be continued by AM session, right, which is one of my daily cycles that sort of go over inside of my group. And if you have downloaded sort of any of my free documents, you would know daily cycles is pretty much what welds together everything that I use. So now we've got our invalidation area. We understand where we are. We have an expectation on the session. Yes, there's a lot that goes into it. Some of the PD arrays aren't necessary. I'd say the main key takeaways is the fact that bias is up, right, as I've shown you, okay, on the daily, on the weekly, and also the intraday aligns with us. So hourly here, clearly bullish, and I've got a session power of 3 and that sort of 4 hour power of 3 behind us. So those are sort of the key takeaways you want to take away. And if you're feeling that I'm overcomplicating stuff, just focus on those sort of key points. So like I said, we've got the invalidation point. This is the previous 4-hour low, and we have this hourly FG. So couple things, you could have just executed right straight off the push into this FEG. That's number one. Okay, so pretty much, let's just say you played the turtle soup, you had your SL, and I always say minimum 2R you want to aim for. Okay, so that would have been clean, very, very nice. 2R targets in play, all makes sense. The other way, okay, you can go about this is you can wait for lower time frame confirmation inside of this level as well, which we'll obviously go ahead and break down. So let me just show you first, if you had played the more OTE style trade, right, which would be where you just have low to high, you're looking for price to retrace into basically just beneath 50 into some sort of OTE region. So let's have a look. There we go. So we tap. Notice how, look, we tap the 4-hour. Now I can't show you this because the 4-hour is just going to show you this completely expanded. But imagine when prices come down, okay, on the 4-hour, you're still holding conviction in a bullish setting or bullish scenario because you're aware and pretty much expecting this to play out, if that makes sense. Okay, you're looking for the 4-hour to actually trade against you based on an hourly power of 3. 4-hour power of 3, and then you're looking for price to expand. So when we're down here, it's going to look like a black candle, but the point is you want to stay focused on what your bias is, where you're anticipating price to go, and using sort of the higher time frame in conjunction to not get caught up in these lower time frame fluctuations. So yeah, let's actually just play this out quickly. All right, so we form a swing point here. We actually go ahead, tap the 50-minute order block here. So again, that could have been a potential entry. We literally still have equal highs here. Could have entered here with maybe your stop beneath the low. Still again, get a nice 2R out of that. Maybe that's your scaling point. Offers another propulsion block area here. Right, so there's a ton of different entries, right? And you can see during PM session, it goes ahead and reaches for the high in the final hour macro. Let's just say you don't want to play sort of the hourly zone on its own and you wanted to wait for some lower time frame play. Okay, a couple options. You have the 5-minute CSD right here. Okay, you have the propulsion block. You also have multiple areas here. I mean, order flow just continues very, very, very nicely. If you think about what happens in AM session as well, it actually just goes ahead, runs out a low, right? So total soup to go higher pretty much, right? When we're in a buy program, any run beneath an old low is seen as a buy opportunity. I don't personally trade PM sessions, so this isn't something that interests me. But yeah, if you do trade that, then it's a nice little opportunity. If we go down to the 3-minute, there's some decent opportunity here as well. We have if you don't like playing the CSD, then you have the market structure shift plus FEG. Price goes high. If you don't like playing the bottom trade, I have a video mentioned. The title is something along the lines of the best entry model, which I basically say is the propulsion block, just because it has a bit more entry behind you, or sorry, confirmation behind you. And yeah, you can see like with this one, for example, you would have suffered. Let's just say you were playing with a fairly tight stop beneath this low, you would have suffered quite a bad drawdown here. Not to say that it should scare you, but it's understandable that this level of drawdown, potentially you might be feeling a type of way about it, right? So that's why I typically say that the propulsion block can feel like a bit of an easier setup, really, just because the propulsion block shouldn't really get traded past the 50%, right, or even closed past that level. So typically you see more aggression away from the propulsion block, and you can test that out yourself. So propulsion block plus FEG, if you wanted a sort of different entry there. Again, nice move higher. It would have yielded you even better risk to reward. If you played this lower level, you would have got pretty insane risk to reward here. So yeah, moves nicely, goes ahead, tags the level. that lower time frame market maker model has been completed. And yeah, then based on sort of the end of the week's price action, we go ahead, run higher, we get more SMT between these lows here, and I might cover this in a different video, but this is a really nice AM session reversal, right, based on NQ's price action. So yeah, hopefully you guys got a good insight into how I like to see price. I feel like there's a lot of information there. There's stuff in there you can make models from. This is me just showing you like sort of what an A plus setup looks like to me. For me, like I said, the bias is always first. Then I couple that with a daily cycle, which I mentioned here. And then as long as you're trading inside of some sort of power of three, the higher time frame a lot of the time will carry you, right? The entry isn't as important as everyone makes it out to be. And that's why I just showed you, like, look, there's so many ways to get inside of that trade, but the key point is that if you haven't got a good system around you, i.e. the good bias, the power of threes, the sort of direction in general, then it doesn't really matter how good your entry is, right? Because price isn't likely to continue in your sort of favored direction, right? So anyways, hope you guys enjoyed that. If you have any questions, comment down below, and yeah, see you at the next one.